Representative Roach, you are both recognized and may switch back and forth as you need.
Thank you, Chair Duggan. I know that you're.
Representative Roach, you are both recognized and may switch back and forth as you need.
Thank you, Chair Duggan. I know that your committee time is valuable, and I want to thank you for allowing us to present this today. Recognize Vice Chair Abbott, Ranking Member Honchowski. I think she just stepped out. Committee members, friends, and colleagues. I would also be remiss if I did not recognize and thank former State Representative Don Crane, who served in this chamber from 1970 to 1974. He was an industry insurance executive, owned an insurance company, and really pioneered this idea with a study group back in 2006. So this idea is not new, but what is new is the opportunity to put this out here for public discussion, and I'm deeply, deeply grateful to Speaker Renner for allowing us this opportunity today. Members, I don't think there's any member of this committee, Insurance and Banking. In fact, I'll go a step further and say that I doubt there is a single member of this House, perhaps this legislature, that would disagree when I make the statement that Florida is experiencing the worst property insurance crisis this state has ever seen. On my desk in my office, I have a letter from one Mr. Thomas Baker, Florida resident, who sent me a 6-page letter with a big red insert that says, "Please help, my property insurance has increased by 650%. His plight is indicative of many Floridians, many homeowners that are paying more for property insurance than they ever have before, with rate increases that are higher than they've ever been before and more frequent rate increases than the state has ever experienced before. This is the problem. And I'm here today, along with my colleague, Representative Hillary Cassell, to tell you and to tell Mr. Thomas Baker and others like him that we have the solution. I'd like for you to think about a state, one of the 3 largest states in this great union, that has been beset by decades of natural disasters, resulting in billions upon billions of dollars in property damage. And after every one of these natural disasters, the homeowners insurance market gets shakier and shakier and shakier until it finally collapses. And by collapse, I mean that 93% of the market had declined to cover natural disasters or simply pulled out of the state altogether. And the legislature was forced to do something. And so they did. They adopted a plan to create a nonprofit, publicly managed, privately financed insurance entity that did 2 things. It provided insurance for all claims and only claims related to these natural disasters, and left the private market to pick up the rest. The result, rates dropped like a stone, the private market came back and was able to write your typical bread and butter homeowners insurance policies without ever having to worry about insuring the incalculable risk of these natural disasters. Private industry made a fortune. That state was the state of California. The year was 1996, and the bill creating the California Earthquake Authority was signed into law by Republican Governor Pete Wilson. I would also mention Texas as well, which has been offering a version of universal wind coverage since 1971. We've got 50 years of empirical data from Texas and about 30 years of empirical data from the state of California. So this is not merely theoretical. I believe that Florida will eventually and inevitably follow this model. I don't think many members of the public realize how precipitously close the insurance industry came to collapsing after Hurricane Ian, and had we had another Ian a few months ago, the market surely would have collapsed. Our proposal is to reform Citizens so that it will provide universal windstorm coverage where excess premiums are going to be used to carry forward to pay windstorm claims in subsequent years. Under our plan, Citizens would become the insurer of first resort for Florida homeowners seeking wind coverage. We have really 2 objectives here. Affordable premiums for homeowners, allow the free market to cover all other claims, and then indemnification in the event of a catastrophe. You want your claim paid. And you might ask, well, Representative Roach, isn't that how insurance works? But what I would say is that what we've learned in Florida from years of paying high premiums to undercapitalized fly-by-night insurance companies is that a paper insurance policy does not guarantee that your losses will be covered. In other words, just because you have an insurance policy doesn't mean you have insurance. How do we accomplish these objectives? We isolate the risk, which is what this proposal seeks to do, and states like California and Texas have done. Members, there are 3 truths when you consider this. There are 3 indisputable, unchallengeable, undebatable, undeniable facts. 1, it's impossible for insurance companies to accurately forecast risks when it comes to hurricane, right? Because no one knows how much hurricane damage is going to occur in their covered properties during the next 12 months. It's unknowable. The risk is uncalculable. 2, we live on a peninsula. We're surrounded by water. These storms will continue to ravage Florida's coastline. There will be another big storm. And 3, we know that the current system is not working for Florida homeowners and taxpayers. So I would ask you to ask yourselves these questions as you listen to this presentation. Is what we're doing now working for our constituents? What does the data show from other states like California and Texas, and what best practices can we take and learn from? And then 3, what is the risk of doing nothing?
Thank you, Mr. Chair, Vice Chair, Ranking Member, members of the committee. In preparation for today's presentation, I did a lot of reading, and I went back and found a commission report that was done in 1993 post-Hurricane Andrew. And if you were to read the report today, it's as if you're reading today's news headlines. It talks about the same problems that our marketplace is currently experiencing, that we've been experiencing since 1993, and honestly prior to that. It's mass cancellations, non-renewals, insurance companies going insolvent, leaving the state, a lack of capacity, high cost of reinsurance. Those are the issues that plagued our system in 1993, and those are the issues that still plague our system today. We're seeing a lot of headlines out there that are talking about, there's light at the end of this tunnel. We've got 6 new insurance companies, 7 new insurance companies that have entered the state. But who have we allowed to enter the state? The same problems that plague us today, which are companies that came in, they're small domestic carriers, they're undercapitalized, they don't have the finances to cover these claims, and as a result, rely heavily on a reinsurance market. We know reinsurance costs are what drive premiums. They account for anywhere between 40 to 50% of what consumers are paying in their everyday insurance premium. So of the 7 new companies that have entered the state, all of them are also still currently being rated by a single ratings company, Demotech. All of them have received A ratings. But when you compare that to independent rating companies such as Weiss, an insurance company like Slide, who has received an A rating from Demotech, has a D+ from an independent rater. These are the problems that plagued our system in 1993. They plagued it in 2006. And they plague it today in 2023. So when we talk about whether or not the insurance industry is coming back because of the reforms that we've passed, sadly, the reality is all we're doing is creating the same mistakes. It's insanity to continue to do what we've done for the last 30 years over and over and over and expect a different outcome. We've heard multiple bills presented today where we've heard insurance company representatives basically threaten that if we ask them to stay on to protect consumers for 1 year after a catastrophic loss, that they're going to leave the state. Well, our plan works for one reason. There's one insurance company in the state of Florida that can never go insolvent, and that's Citizens. Citizens is created to be here for us in our time of greatest need. They can't leave our state. They're set to be here for us during that time. We went 12 years without a storm. As soon as we got a storm, insurance companies began to claim that they didn't have the funds to cover it. We know that the insolvencies that have plagued the state are a result of undercapitalization, poor management of funds, paying executives. By turning our dollars over to Citizens, those things are no longer existent. In good years, when we go 12 years without a storm, those dollars that we collect on premiums under our plan will go to a bank and sit and wait for that rainy day. We won't be worried about executives receiving payouts that we can't follow, that we can't track, that go into third parties. The biggest concern, though, when we talk about this type of plan is the assessments and the risk that we as Floridians bear. Well, we already bear that risk. We bear it when private companies go insolvent, and we bear it with the potential of Citizens. And when I think about hurricanes, as devastating as they can be, I often think about what happens after the storm.
Rep, you have 1 minute.
Thank you, sir. After a storm, usually your neighbors come together. You go outside when you don't have electricity. You share resources. You have those conversations. You meet with your neighbors, and you help each other out. Floridians go from coast to coast, bringing resources, bringing supplies. Neighbors helping neighbors. Floridians helping Floridians. That's what our plan does. This plan allows Florida and Floridians to take care of themselves. In the event of an assessment, which is always our biggest concern, whether we get them from FIGA when the private companies go under, or we get it as a result of a Citizens assessment. I would rather know that I'm saving money on a premium with a Citizens policy like this. And if an assessment happens, my money is going to bail out my neighbor and not bail out an insurance company executive. Thank you.
Thank you. Excellent time management by you both. Yeah. Our next participant is Mr. Serio, Tim Serio, President, CEO of Citizens. Mr. Serio, I will give you a 1-minute warning as well.
Okay, thank you.
Yes,
Thank
sir.
you, Chairman.
You're recognized.
Thank you. First, I'd like to thank Chair Roach and Representative Cassell for caring about this issue. It is a tremendously important issue, and the Citizens Board has not taken a position on statewide wind-only measures. So we want to provide information that this is a very different change in direction. It would fundamentally change the mission of Citizens. And although they haven't taken a position, I would say we've been focusing as the market has recovered. We want to take good care of the policies we have, but we've been focusing on depopulation. And for obvious reasons, this would turn that in a different direction. Citizens currently offers wind-only coverage to coastal areas in 29 of Florida's 35 coastal counties. It is important to note that we offer policies with wind coverage included in multi-peril in all 67 counties. Multi-peril, of course, includes wind, but wind-only and multi-peril are offered in in the 29 regions, but wind-only is only in these 29 coastal counties. So to evaluate and take a look at market share, we're using industry data that was provided by the Office of Insurance Regulation. The latest data available is from September 30 of 2023. Just to update these figures a little, I will say that we have made really strong progress in depopulation. Personal residential, as of December 31st, we've shrunk down to 1.2 million policies with 444 million in exposure. Commercial residential, on the other hand, has grown. You'll see on the chart from around 4,200 policies to over 13.5 thousand policies with 109 billion in exposure. That is a tremendous figure, and we're seeing a tremendous amount of growth in commercial residential. Citizens has 15% of the personal residential multi-peril market for companies writing more than 10,000 policies. And that's sort of a significant sort of cutoff. That's why we chose it. There are 58 companies that write multi-peril policies. Only 7 companies have at least 10,000 policies and write ex-wind policies, or policies that exclude wind. Citizens has 5% of that market. And there's only one company writing more than 10,000 wind-only policies, one private company, and in that market, Citizens holds 80% of the market share. For the commercial residential market, Citizens has 16% of the multi-peril business, where there's 18 carriers writing such policies. 8 companies write ex-wind, and we have 21% of that market in the commercial residential. And for wind only, we're the only, unfortunately, we're the only game in town in that business for commercial residential. There are really 5 issues that I think it's important for the committee to consider in this workshop. Pricing, settlement practices by the private industry, because as you may know, what this bill will require is, although we will provide the backup for the wind-only coverage, we'll write the check. The private insurers who don't have the coverage are the ones adjusting the claims and making a determination as to the loss. Issues with the Florida Hurricane Catastrophe Fund and assessment. The bottom line is that all of these points is that assessments, at the end of the day, what we're going to show, unfortunately, is that assessments are going to, or the potential for assessment is going to increase exponentially. This shows the pricing inadequacy in personal and commercial residential policies, the current price inadequacy, but you can extrapolate as to what it would look like if we went statewide wind only. Currently, for personal residential, the water and all other perils subsidize the wind peril for the personal lines account homeowner multi-peril rates. So even with this subsidy, homeowners' rates in the aggregate, you can see, are still inadequate by about 40.5%. And when I was here last week, I talked about our rate inadequacy, the fact that we're charging actuarially unsound rates. If Citizens were to offer the homeowner product statewide for just the wind peril, that rate inadequacy we could extrapolate out, would be about 103.1%. And of course, the legislation does not require that we charge actuarially sound rates, which is where we're trying to get. So we would essentially need to more than double our rates to have an actuarially sound rate. But that's the rate indication for personal residential. For commercial residential, these mainly covered the condo associations and apartment buildings, where the all other category and sinkhole perils subsidize the wind peril once again. Even with this subsidy, commercial residential rates in the aggregate are still inadequate by 87.2%. And if Citizens were to offer commercial residential products statewide for just wind, that rate inadequacy would be 183.9%. So based on the personal and commercial residential pricing alone, we would expect significant growth just because of competition. There would be no competition. It would not make economic sense for somebody to have somebody in the private sector try and write a wind-only policy, and we don't think there'd be an incentive for the private sector to do so. So the current inadequate rates that exist for these segments of business and the likely influx of new policies at inadequately priced rates, along with the substantial increase in exposure, are concerning, not just from a pricing perspective, but also from a risk transfer perspective, which I'll talk about in a moment. So if Citizens is to provide windstorm coverage and the private market provides the X-wind coverage, or excludes wind, the legislation would have the X-wind company adjust and settle the wind losses. And again, this is concerning for a number of reasons. You need, when you're settling claims, when you're making these determinations, there's an incentive when you have skin in the game, for lack of a better term. Otherwise, you're giving companies rights to your purse, and there's no downside for them. There's no consequences. And as an example, this is why insurance has deductibles. Having no deductible would cause insurance costs to skyrocket in many cases, because the policyholder doesn't make the determination, is this worth fixing myself, or do I really need to pay the deductible and turn it over to my insurance? Reinsurers know this, and this is key for the reinsurers. Citizens currently receives lower rates, partly because the reinsurers understand our claims-paying practices. They've dove in, they understand how we process claims, and this could have a negative impact on our premiums or even our ability to get reinsurance at all, because they're not going to be, they're familiar with us, but they would also have to be familiar with how maybe 60 other private carriers are going to be handling and adjusting claims that we are responsible to pay for. That will be a concern to reinsurers. Detecting and fighting fraud is an example. It takes careful analysis of how claims are handled, combined with the cost associated. That's, for example here, the claims department has to collect the right kind of data to chase the fraud. And you have to understand what data you're chasing, and the reinsurers are going to want to understand that as well. How do we keep a handle on fraud? So it's the bottom line is, this is sort of akin to the National Flood Insurance Program, where you have actuarially unsound rates like the NFIP does, and somebody else paying the claim. And we've seen that insurance right now, it's currently in its current form, is just it's a disaster. So it just overall, this would make it very difficult for Citizens to put controls in place to be a good steward of our surplus. We've seen how this went very wrong with AOB. AOB, we didn't have great control of the claim. Work would be done. We would get a bill, and we would have to pay it. I think the reforms that the legislature passed on AOB they have been a game changer, and they've allowed us to take better control of the claims process, and the reinsurers have noted this. So the bottom line, it's going to make it harder for Citizens to control our claims cost, and we think to get reinsurance. This slide shows how much more reinsurance could cost if Citizens were to grow from writing additional wind policies, as we think we would. To estimate the possible impact to reinsurance, we created 3 scenarios that assumes a 50%, 75%, and 100% of the wind policies from the industry would move to Citizens, which is as cheap as we would be, it's a very foreseeable scenario. Assuming 50% of the wind policies from the industry move to Citizens, the total insured exposure would be almost 3 times more than the current book of business, and the reinsurance costs would increase by 333%. As of the figures I show you here, we have $618 billion in total exposure. That figure would jump to $1.6 trillion. and our reinsurance costs would jump from $650 million to $2.8 billion.
Mr. Serio, you have 1 minute.
Yes.
1 minute.
Oh, I'm sorry. Let me jump ahead. Assuming 100% of the wind policies from the industry move to Citizens, the total insured exposure would be $3.17 trillion, and our reinsurance costs would be $5.6 billion. I don't even know if there would be enough capacity in the market that would allow us to obtain the necessary amount of reinsurance. There are questions regarding the CAT fund. We don't know what the role would be to the CAT fund, for a CAT fund, if we're the only payer. And then lastly, let me hit these scenarios. We've tried to estimate the impact if there was a hurricane like an Andrew or the 1926 Great Miami hurricane that hit us. You can see here that if we had an Andrew hit right now, we would be fine. There'd be no assessment. Great Miami hurricane, a very, very small assessment. If Andrew hit and we have CAT fund coverage, we can still expect anywhere from a $645 billion assessment, which would basically be a 10% assessment, trying to provide some helpful facts.
Obviously, for the people who are answering, be as complete in your answers as possible, but also succinct if possible. So our first question will come from Representative Fabricio.
Thank you, Chairman, and thank you, members, for the presentation. This question is to Mr. Serio. So I'll couch it in this, and I'll be as brief as possible. So if over the last several years we've been working towards ensuring that Citizens is the insurance carrier of last resort as a safety net, so to speak, like in Miami-Dade County, we have a safety net hospital, and in the state of Florida, we have a safety net insurance carrier. If we were to push it to the head of the line and ensure that it's the insurer of first resort for these type of policies, in your view, sir, what would occur to the free market that we've been trying to create to attract more capital to absorb that risk in Florida?
You recognize.
Thank you, Mr. Chair. Representative, what we have seen with the reform so far, we have seen new entrants into the market. We have seen reinsurers being very encouraged by what they see, willing to deploy more capital. And one of the things that we have harped on, for lack of a better word, to you all, to the OIRs, our rates are still too low. We think our rates are distorting competition. And when you talk about being the safety net, what is the net? Is it to be available when there's no other avenue for reinsurance, which is what we're supposed to be? Sometimes that conflicts with affordability, right? I mean, we are statutorily mandated to charge actuarially sound, non-competitive rates, and that's not happening. This would, because of the glide path, and this would just, if we go statewide wind only, without charging actuarially sound rates, that would exacerbate, and I think the issue, and it's a policy decision, either way, whatever the legislature wants to do, but it will pull more private policies into Citizens, and you just need to recognize that what you're doing, you're not promoting the private market, which is a little bit different than the philosophy that we have now to try and get our rates up and be actuarially sound and non-competitive as required by Florida law to be.
Thank you. Rep. Whitson.
Thank you, Mr. Chair. Very good presentation. My question is, of the new companies that have entered the marketplace, how many of those are writing residential, commercial for condominiums?
You recognize.
I think one, right? Just one representative.
Rep. Steele.
Thank you, Chair. Do you have to have, and this is for the reps, sorry.
Yep.
Thank you. And I commend you guys for taking this approach. Do you have to have homeowners to have the wind coverage?
You recognize.
Do you have to have homeowners to have the wind coverage? This is conceptual and theoretical, but my answer or my advocacy would be no.
And then are you going to straighten out the complex problem between rising water from wind versus flood?
Well, Chairman.
Yes, you recognize.
Thank you. Yeah, that's exactly what we're trying to do, and what we see happening so frequently, and has happened, to my constituents, and I'm sure yours, is anytime this happens, you have the flood coverage and the homeowners insurance pointing fingers at each other. No one wants to cover it. No one wants to pay. And, look, we're all shaped in part by our experiences, but I'll tell you that in hearing from my constituents, hundreds of them, if not thousands after Ian, I had very, very few complaints about how they were treated under the National Flood Insurance Program versus almost universal complaints about how they were treated by their homeowners insurance company, which just prevaricated, deny, delay, until these homeowners were forced to accept pennies on the dollars for their claim and move along because they got so desperate. I think that's kind of how the game works. But if you isolated this uncalculable risk to citizens, getting back to this free market argument that we just heard, this would absolutely incentivize the free market to come back into Florida and they would thrive. I mean, think about why is Citizens providing coverages that the free market is able and willing to provide? We need to isolate, to segregate this incalculable risk, and that's what this program is designed to do.
Rep. Cassell, do you want to add anything? Okay, thank you. Rep. Tan.
Thank you, Mr. Chair. This is a question for citizens. I was listening to your presentation on the reinsurance rates, and do you find those rates acceptable?
You're recognized.
Thank you, Mr. Chair. Sorry. The rates that we're paying now, we've seen the rates, Representative, last year in the reinsurance market, they were not as high as we expected. And we think that the rates even this year are even more promising. I don't know if they'll be lower, but we think they're starting to level off. If we grow exponentially like that, I mean, I don't know if we could afford it, and I don't know even if we could, if there'll be the capacity to acquire that reinsurance. I don't know if I'm answering your question.
Thank you, Mr. Chair. I'm not quite sure either. So the numbers that you presented were
Right.
startling to me.
Right.
And so given the flexibility afforded to citizens under the legislation, how much would you anticipate having to put aside for future claims versus the amount of coverage you would seek at the same time, assuming you think these rates are prudent?
So we're required by Florida law to use our best efforts to acquire enough reinsurance for a 1-in-100-year event. And I'm going to ask Brian Donovan, our chief actuary, to come up if I botch this. But the point that we wanted to make was under these scenarios with reinsurance to cover the amount that we're forecasting. It's a tremendous amount. Last year we bought $650 million in reinsurance. If we grow if 100% of the wind market comes to Citizens, which is very, very possible, that reinsurance amount jumps to $5.6 billion, or 645% more than what we had to buy last year.
Rep. Griffiths.
Thank you, Chair, for this opportunity. And this is probably for the reps. And I actually maybe have a question for each rep, as for Tim as well. But you mentioned the insolvency, the under-collateralized, the businesses, the insurance companies that are in the state are teetering on the edge. If Citizens did not have the backing of the state taxpayers, would we consider them insolvent or teetering on the edge?
You're recognized.
How would they rank as a credit with the credit bureau?
You're recognized.
If they did not have,
Well, we just learned that we're $600 billion. We have $600 billion in exposure. So would that be considered a credit risk if they did not have the backing of the taxpayers to pick them up?
I'm going to try to answer that
Yes.
the best that I can. So, it's my belief and the belief of others who have studied this issue, and we can get you those studies, that one of the benefits of the centralized coverage that we're talking about is that it will reduce the need for reinsurance coverage for the windstorm pool, which is going to overall reduce the cost of providing coverage. I mean, I think that reinsurance rates, in fact, I know that it's 50% of the premium that's charged to policy. So one of the things that I feel that Citizens may not be calculating in providing these numbers to you is a reduced reinsurance rate that they would pay if this proposal got legs and took off. So I think that a centralized pool that we're talking about is going to allow Citizens to better manage their risk exposure using rates appropriate. And again, this what we're advocating, it's not free. People would pay a premium just like they do now for this coverage. And when you have those years without a storm, and thinking about where I live, I mean, we had Hurricane Charlie hit in 2004. The next significant storm was in 2017 with Hurricane Irma. That's a 13-year period. When you have those periods, perhaps 5 years, perhaps a decade, perhaps longer, without a significant storm, these premiums that people would pay for this coverage would continue to build and build and build and could be used subsequently to pay off these claims. instead of having those profits siphoned off to either another corporate entity or management company, then those collateral reserves are not there when the claims need to be paid out. That's the problem we're experiencing in Florida. You would not have that problem if you had a universal wind coverage under Citizens. I'm not sure that I really addressed the root of your question, but that's what I have for you.
Rep. Cassell.
Thank you, Mr. Chair. And I just really want to add to that, one of the biggest concerns that we see right now with where Citizens geographically is located, where their policies are, it's in the highest risk zones. It's in the most vulnerable places. What our plan proposes is that Citizens actually has the ability to spread that risk out throughout the state into those places that are cherry-picked right now currently by carriers that are coming in and taking out policies and only taking out the best least risk policies possible. At the end of the day, Florida's still on the hook for the biggest policies and the biggest risk. Citizens insures the coast. Citizens insures condominiums. So when you look at potential reinsurance costs and any reinsurance savings, reinsurers are actually going to look at the fact that now Citizens is spread out across the state, doesn't just carry the highest risk, most vulnerable properties on its books. And because of that spread out of the risk, I think that'll also assist with reinsurance costs. And one of the reasons why Citizens is able to negotiate lower reinsurance costs in the private market is because we have the backing of the state, because it is an insurance company that can never go insolvent, because either the state will come in with an assessment. So I think that'll actually help reduce the reinsurance costs.
Last question, Rep. Benjamin.
Thank you, Mr. Chair. I'm just going to go back to this concept that somehow this is going to cost Floridians more money, or somehow it's going to affect, in a negative way, our free market. You guys studied California and Texas. You guys took a look at what this plan would do, or what it has done for their free market. Can you give us some of that data and to assure us how Florida may take to it?
You recognize.
Thank you, Chairman, and thank you for the question. Yeah, so let me just say this. I mean, there are certainly, look, this plan is not without criticism, and it's not without controversy. If someone brings me a better idea, I'll be that champion. But I haven't found a better idea. And you know, the criticism about, oh, it's going to bankrupt the state. Look, Texas, as I mentioned, has been doing this since 1971. They still don't have a state income tax. They're still financially solvent. So I think those things are a little overblown. And in terms of like data, here's some things I'm going to tell you, and I can send every member of this committee these reports. After the working group that Representative Crane put together back in 2006 produced document after document on this study, here are some of the people that looked at his plan. John Rollins, Citizens' former chief risk officer, reviewed the group's paper and wrote, and I quote, "It's a surprisingly persuasive argument." Florida Tax Watch vetted his plan in 2011 and found the idea, and I quote, "a viable one." They praised the fact that it was the only solution with mathematical modeling backing it up. The former head of Citizens, a man named Barry Gilway, said he believes that while he believes competition among private insurers is the best way to lower rates, he said the idea, and I quote, "is not unreasonable." So, and I have had insurance industry executives, agency owners, and I'm going to differentiate that from lobbyists that represent the insurance industry in my office, saying that this is a good idea, that they would support this. But there are a number of studies that have looked at this proposal, and I think there are lessons we can learn from Texas and lessons we can learn from California and take those best practices and make a model that's unique to Florida. But I am convinced that inevitably Florida will have to embrace this model.
And just to add to that, if we look at history, history is going to repeat itself, right? And the current situation that we find ourselves in is a result of small domestic companies coming in that were undercapitalized, that received a rating from a single company that had no history in any other states and that relied heavily on a reinsurance market. If history repeats itself in 20 years, our successors are going to be looking at the same crisis and asking why we haven't done more. Now is our opportunity to create a program where Florida saves Florida, we protect our neighbors, and we create a fund that will be there for us in a rainy day when these insurance companies leave us high and dry.
Thank you. That concludes our time. We went a little bit long, but this was a great discussion. I want to thank the representatives, Mr. Serio and your team, for your presentation and the data. Thank you for the questions. This, I think, was designed to be thought-provoking. I hope you feel that it was. We'll see where